Good morning, everyone, and welcome to the European crossover webinar. And we've seen a pretty good sell-off in equities, as specifically in the Nasdaq, as we've lost that 13,186, that pivot area that we had discussed yesterday. After the FOMC, we saw this solid run back, and they were able to get above, finish the day just above 13,186, allowed this market to push up in Asia. And then, of course, we came back down to the 13,186 again. We held it. And once we got back 13,186, then we hit a bevy of stops. And you can see it more pronounced on the 30-minute. That's a 2-hour chart. On the 30-minute, you can see here, once we dropped, we lost the 13,186 here. We rallied up. Almost had like almost like a little bit of a gravestone doji. We drop here. Once we lost 1386, which is right here, this level, you can see we just hit stops and we just started taking people all out of positions. So it's interesting reaction. Excuse me, as we had mentioned about those key levels for the market to hold, and that's what kept the market on the bid as we closed in from the U.S. session, and actually pushed the move once again in the Asian session, only to go in and lose that, and then lose it, then to bounce from that same 13,186. They actually took it out, held, and then once they lost it the second time, that was it. Then you hit a bevy of stops. People had their stops at that 13,186 or just below it. You can see here 186 here. And then once we lost this level right there, it's probably where we had the people come in, and that was it. Too much. Had to go and jump out, which is anyone who was trying to pick up. Right there. That's where we hit the stops. And now we're under pressure because now it looks like anybody who was long there, now they're trapped or they've already been knocked out. And then the way the market then is going to go and look at it is ultimately is a failure. And here's that pivot we had talked about previously. And the close in the U.S. session was above it, even though this the close in the U.S. session, regular trading hours, was at 13,192. We have these extended hours, which still include beyond that, and we had a little bit more of a sell-off. We closed above it, and then, of course, they extended it in Asia, and then once we lost that pivot, they hit those stops, and that's what's got the market now where, well, God, you've gone up there, got the pivot, now you've lost the pivot, so moves back to this same level are going to be, people are going to be looking at the other side, which is to push it right back down again. Take a look at what we stand here with the SPOOs. Previous to Monday, the all-time high had been 39.59 and a quarter, or 39.59 and 3/4. And we finally got above that on Monday, and we vacillated back and forth. So now we've lost that again. So once again, it looks like another failure after those who are bullish could have, claimed short-term victory, especially right after the FOMC, which would allow for the market to move higher, which, as I said, it did in Asia. But once we lost it again, that opened the door. Now, the move isn't necessarily as pronounced as it is in the Nasdaq, but we're seeing that once again. We'll take a look at what we stand here on the 10-year note. Oh, there's your reason why. That's it. There you go. There's your culprit. You see that this is on FOMC, and then that's when I remember sharing here as the market was taking off, somebody was saying, oh, it's on the bid or it's going blah, blah, blah. And I said, well, we came into resistance, which we did, And then we took out the stops and look, here we're breaking even higher. Now look at it. In this case, breaking lower higher in rates, and now we've broken to new lows. And that's what has gotten everything. And that's why the NASDAQ is getting whacked here. So look at this. We saw a good solid rebound. We rebound higher. And we came up here, and we're actually at the time, we were right at 1307, 3207. I said, well, we're at resistance. And they actually got above it. And then they failed. We came back, and then wow, look at this. We came apart, and that's what's killing them right now. Is it the interest rates are getting even jumping and going to new highs, i.e., new lows in price, and that is going to be the prick in the balloon. Consequently, let's see here. Gold's up though, plus $12. We'll take a look at the news as far as economic data. We'll have Eurozone labor costs in about almost a couple hours. We do have Bank of England today. And as we move into the States, we'll have jobless claims, Philly Fed, and Canadian New Housing Index. And it looks like this area held here. I did the analysis for the Canadian dollar. I was actually talking to someone in the Asian session, and we had some support in this down here. It hadn't reached that area yet, but we had the support in this area here. And in the analysis, I said we can still 2411 is still key, but they have to defend this, and that there was some support. And I think it was right around this area here, and we've come back and since moved back above 124 at least for now. The news is fairly light. We'll jump into that. The US dollar was on the defensive on Thursday after the Federal Reserve signal was in no hurry to raise interest rates through all of 2023, even as a swift recovery in the world's largest economy. The dollar index against 6 major currencies was at 91.49. The euro eased down to 19.65. What the Fed has said is a very market-friendly outcome. It's negative for the dollar, good for inflation expectations, says Chris Weston. So you can see why this has thrown a lot of people off. But it is correct. That's how the Fed interpreted it. But what the key is, after holding these new lows in the 10-year, we rallied, saw a good bounce as Jerome Powell was talking. We've been pushed even higher and took out and got above this previous support, which is now resistance. And then look, we turn around and completely fall apart. We're coming off the lows, but we are under, some trouble. So once again, like I said, as the market comes back, they're going to be trying to sell against it. The key level, once again, is going to be that pivot, 13,185. Anyone wants to take on the market, as long as you just don't get above 13,185, you're going to be okay on the short side then. If you're challenging that with that idea of where we are in rates. Ultimately, the market was kind of positioned for something a little bit more hawkish, and maybe the fact that those rate hikes are pushed into 2023 has been enough to cause some decent dollar selling. The U.S. Central Bank now sees the economy growing 6.5% this year, which would be the largest annual jump in gross domestic product since 1984. Inflation is now expected to exceed the Fed's 2% target to 2.4% this year. Although Fed officials think it will move back to around 2% in subsequent years. The 10-year is edged to about 1.67 and was nearing a more than 1-year high. Against the yen, the dollar went as low as 8.62 after a Nikkei report said the Bank of Japan is widely an implicit ban of which it allows long-term interest rates to move to around a 0% target. A recent Reuters poll showed 2/3 of Japanese firms expect the BOJ to curb rises in long-term interest rates and keep them steady ahead of the central bank's review. The pound was trading at 39.46. Bank of England expected to keep the bank rate at the historic low of 10 basis points. and its bond buying program unchanged at 895 billion pounds later in the day. Similarly to what we've seen from the Fed, the Bank of England will talk up the prospects of the economy relative to where we've been, but at the same time, emphasize that we're still a long way from full recovery. We expect the BOE to gently warn against a shift in market pricing and a rate cut to around 50 basis points of hikes over the next 3 years. The Aussie dollar rose to a 2-week high of 78.35, where its New Zealand counterpart briefly lost momentum after the country posted a surprise contraction in GDP in the final 3 months of the year. With that, we'll move on to the analysis. So the euro rebounded on FOMC day after an accommodative Fed. Resistance will be 2024 with support at 1924. Let's get that in place. And once again, it's these hiccup in interest rates that's really flipping these markets back and forth. Onto the cable. The cable moderately rebounded on FOMC day. Resistance will be 39.93 with the support at 38.92. And the high today has been, looks like 39.99. So 39.93. $38.92. Onto the Aussie dollar. Okay, the Aussie has been edging lower over the past 3 sessions. Support for Wednesday will be 70. That's incorrect. Oh, that's right, because Blake had done the Asian analysis after I'd done it. So, and I was looking for 78.57. I remember because he did his. So I'm gonna add on to it to cause any confusion. So I know for my own self I had 78.57. Looks like we got to 78.47 or 52. Anyway, that was my number, 78.57. And then on the downside support right here, see there, and this one right there to be 77.55. I'm not sure if we'll get there today, but in case we do slow it back, 77.55. Onto the Kiwi. Kiwi closed above the price area of the last 5 sessions. Resistance for Thursday will be 72.89 with support at 71.75. So still with these wide areas for good reason. Onto the dollar CAD. So the dollar CAD has come fully unglued. Level 2411 remains key, but below the market But support below the market is 23.62, and not bad. I was up by 2.5 pips. Is 23.62. Bulls need to regain 24.11 on a closing basis. Resistance will be 24.63. So remember, we had, and on FOMC day, I lowered it from 24.11 to 24.05, but we had that 24.11 previously. So now I put 23.62, which wasn't bad. I was off by 2.5 pips. And resistance is 24.63. But I was saying the 24.11 is still key. And if they could go on and regain that, then that'll be key for them to defend that. On to the dollar peso. And like I said, we were in Asia, and I think at the time it was trading like at 23.87, I believe. It might have been 23.85. But getting back to this, some of these I come close with because I don't give you a weather report. I just give you the levels. That's it. So some of these I will get, extremely close. And because really I'm just looking at the levels like, okay, now they're going to challenge this one. They're going to challenge that one. I really don't care what transpired or what emanated to generate whatever, because I'm just going with the levels. Now, of course, we had FOMC day, we took out that 24.11, i.e. the Canadian dollar, but I said, well, it's still important as a weekly level. And then I kind of looked at some levels below, and I saw the 23.62. Of course, this morning's low was now 23.65. Now they've rebounded, but that's it. I don't write a weather report or they said this and this central bank governor said this, and then he scratched his rear end, and then it looked like this. I don't care. I just go with the levels. I mean, I'll take that in consideration for tone. Like yesterday. Yesterday was FOMC day, so I still believed in that 24.11, but I moved it down to 24.05. And I think the low at the time, I mean, we got down to, what was it, 85 or 82. We rebounded a little bit or something. But that's okay. How much further can it go and push? Where's the next level? I think I put in there 24.11 is still important. Actually, I was doing the analysis when I was speaking to, I think it was Didier at the time. But anyway, nonetheless, like I said, that's it. I just keep it simple. I just go with the levels. That's it. So that's why when you see these analyses that I do, I'm not writing a whole bunch of stuff and, the central bank governor of Mexico said this and said that, and they thought. I don't care. I just go with the levels. That's it. And let the levels do the talking. Dollar peso's fallen back to the ground after its big flight. Support on Thursday will be the prior pivot of 2023 with resistance at 2045. And here's that 2023 pick, that big old pivot we had before. So 2023 and 2045. The low so far has been, what was it, 2027? So not too far off of that. 2045. High so far has been 2049. And actually my original one was 2048, but I thought that was a bit too much high. So I went with 2045. Let's go to dollar yen. The dollar yen is retaining the bids, no changes. And we're still looking for potentially a move. We've talked about it on the weekly level to 957. And we're still holding up very well. No changes. And on the downside, we gave it some room. Was it 845 or something like that? 835. I mean, I actually lowered it, I remember, for FOMC day. So we'll put it back because I think it was 845. We gave it some room. And dollar index. The dollar index fumbled the potential for a move higher. Support on Thursday will be 91.08 with resistance at 91.86. So it still has a pretty wide range. Yeah, 91.86. On to the cross rates. Oh wow, we're still trying to push higher. Holy smokes. On the upside, 78.71, we are above that. Let's see, how much further can this thing go to? Holy smokes. There's a 78.71. Oh, right here, this weekly close, which is 79.02. Well, there we go. 79.02. And the pair back just a little bit. Look at a 2 hour. And for support's going to be right there. 78.78. Oh, that's too close. Because it's on a 2 hour. I'm not looking on a daily. Right there. Still really too close. Let's back into the daily. $78.31. Euro pound still sucking wind. No changes here in Euro pound. 85.16, 85.82. We did get as high yesterday as 86.04, but you can see here we're back under pressure again. So keep it here. Go to Euro odd. Sheesh. Pushing still lower. Look at that. And it's going to be right here, the close. Or actually, the open, I should say. That's where they went to, 52.71. And resistance is going to be right there. 53.68. Euro QE. This low right here, that wick. Oh, they're still holding there, 64.79. I have 64.75, so Mox next, 4 pips ain't going to make any difference. And I put for 66.27, and yeah, that's fine, 66.27, if we're able to get this thing to rebound. I mean, immediately you'd be looking at 65.72, but we're still close enough that we could see you got a lot of these closes right in here, so we could gun some stops before tomorrow and try and push up. But that's where the real resistance at this point is going to come in. Onto the Aussie yen. Man, everybody's going again against the yen except for the dollar. Go to the weekly. Dollar's such a dog, I swear. 85.54. You think the dollar would be going bananas in a lot of these interest, and still won't. And support's going to be this. I'll put it right. Let's go with the week daily. Right there. 84.49. On to the guppy. Everybody's gained against the yen except for the dollar. What a dog with fleas. Oh, here's that. Remember we talked about that between the 52 and 52.78. Let's take a look on the weekly. Look at that. So 52.78, but this is pretty heavy duty right there. 52.78. And support marker 51.64. We came back down here, so it's going to be 78.25. That's clear as a bell. It's just once, that's what I keep saying. These things just trade on levels. I really don't care if some guy got assassinated or whatever happened. Look, they trade to the levels. That's all they do is they trade from level to level. That's it. Resistance at this point would be this par close here, 79.35. There we go. There's the bias chart. Mirror says if you can look at the platinum and the Russell. Let me look here. I mean, and I stand by what I say because honestly, I was even going to cancel Reuters. I don't even follow it other than I do the news to set the tone for the day. I don't even use Reuters for anything else. I was going to cancel it. I mean, that's how much I've been like about, I don't care about the news anymore. I mean, I use it to set the tone, but I really don't care about the news. I just don't. It doesn't matter. What's there in the price is there, and the price is going to come. And it's like, you know. So we've been talking about that, Amira, and you can see there's that 1240 we talked about yesterday. And that's where they need to get above 1240. This is on the daily, and this has to be defended. And they defended it yesterday. Look, that right there. So we'll even put this right here. There you go. See? All about the levels. And I go to closes. You see, I don't go by necessarily where the wicks are, although if I see a confluence of wicks, you can see here, but I go where the closes are. And I keep saying the same thing because I say, with the closes, it's put up or shut up time. So it's like, wow, I'm long, but if it gets, by the time it closes, I got to get out. You see? Whether it closes on an hourly bar, a half-hour bar, a 2-hour bar, a daily bar, a weekly bar. That's why you see me put these support and resistance through the bodies, whether it's the open of the body or the close of the body. And you can see, and then I go for confluences of these, if I get them, confluences of these wicks. You see here, 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 here. You see what I'm saying? So that's what I'm saying. And they need to get up above, which was this 1240. You can see where they go to, right to 1240, and then they came right back down. Where they go down to, right where this body is. You see? I really don't. I have no idea what's going on with platinum. None whatsoever. I could not tell you any lick of information on platinum right now. I mean, I know what it's used for, but I'm just saying primarily industrial, but I'm saying it's also sometimes regarded, I don't want to say necessarily precious metal, but nonetheless, that's what I'm saying. I don't even look at the news for that. He wanted to see about the Russell. Let's take a look here. Russell's been given back a little bit of ground. Still hella bullish. You can see yesterday, really, once we got this little mini hanging man, and then we rolled over, and then we've rolled even further, but the Fed brought them back. They're still holding up relatively well. We'll go to the, like I said, I don't follow too much other than I'll look at the S&Ps, but I'll keep track of where the YM is, because it has impacted. They've taken their cues to a certain extent. So, but I do have the Russell here, even though I really don't even follow it. So look here. So let's take a look. You can see here where we really fell apart. And boy, this was a hella. Look at this one, this little gravestone doji right there. You see that? This is on a 30-minute. And then from there, it just kept sliding. Of course, yesterday we got the whole thing from Jay Powell, and now we've slid back. Key for the Russell now at this point would be, we're at support right now. See that? Once again, you see me going with the bodies. So I go here. F3. Right here. See how they gravitate towards, they push down, they go for that target right here. And then, of course, the next key would be right here. So right there. So if you were short, you'd be taking some off here, but see whether or not we drop into this area here. Of course, we're under a lot of good pressure because of where interest rates are. We'll jump back to that. Here's the 10-year note. And I'll go, which I'm focusing more on, is a 2-hour and 30-minute. Right here. Okay. So you see, this was support on the way down. I remember when we were here, we were breaking lower, and I remember putting 3207 as my support. And then I put 3131 at the time. So you can see here, we broke low, and we're really under pressure. We came back here, came up short of the 3207, we dip, and boy, we break, and things look really terrible yesterday. And then with Jay Powell, we just start rallying. And I remember someone mentioned in the chat room, and they mentioned it's rallying, and we were exactly right at 3207. I go, and I even posted a chart. I said, we've got resistance at 3207, but they even took out 3207 by just a little bit, and then that was it. And now in Asia, coming into Europe, we've completely come unglued to new lows, which is new highs in rates. So that's what has kicked the stool out from under the indices. Even though everything looked so good yesterday, but we're still moving higher in these rates. Even though Jay Powell said the bond market's like, I don't give a rat's, you know what? And that's the focus today. And we talked about the profile, went into that more extensively in the Asian session. But that's the thing about the profile. That's the same. It doesn't tell you, oh, this is where it's going to go. That shows me where the levels are. And if we can ascend beyond a level and the market accepts it, then we got to move to the next level. Well, when the market lost at 3186 in late Asia, then kaboom, we hit those stops. All those people are trapped. They're bailing, and then we have to move lower and lower to find offers to attract new buyers. And essentially, that's what happened. But anyway, that's where we're at. Have a good day. I'll see you in the chat room. Thanks for joining us here on the webinar.